Under qualitative, we say that it must be engaging in business. Number two, we say its operating result must be reviewed by the chief internal decision maker. Then number four and number three is that the financial information must be available. Then we have quantitative criteria, of which we mentioned that it must be engaging in business. It must be engaging in business. The 10% revenue rule. 10% revenue rule. 10% revenue rule. Then 10% asset rule. Asset rule. Then 10% profit or loss rule. Profit or loss rule. Therefore, at least your asset must be at least 10% of total asset of all segments. That is when we can report you as a segment. Now, for us to discuss what we've introduced, I gave you the format on how to prepare a segment report. I gave you the format on how to prepare a segment report. Therefore, we just want to go straight to a question. Let's go straight to a question and see, how do you report on a segment? How do you report on a segment? How do you report on a segment? Let's go to the question of September 2021. September 2021. September 2021. We go to the question of September 2021. September 2021. Question number September 2021. If you are there, you say yes, September 2021. Question number 2B. Question number 2B. September 2021, question 2B. Quickly. September 2021, question number 2B, it says, Dandasa Limited is a conglomerate whose equity shares are quoted on the National Securities Exchange. The group manufactures, distributes, and retails food products. The group also operates a hotel chain for purposes of diversifying its revenues. The group's financial controller wishes to know if IFRS 8 operating segment applies to the entity, and if so, what segment should be reported on. He informs you that the operating result of each of the divisions presented below are internally reported separately to Chief Operating Decision Maker. The following information is available. Business, we have revenue, revenue external, internal, then we have profit and assets. We have manufacturing, distribution, retailing, and hotel chain. By applying the requirements of IFRS 8 to the above information, explain which of the business of Dandasa Limited are a reportable segment, 10 marks. Now, in this one, examiner just want to know if which one is a reportable segment. Now, for us to say it's a reportable segment, we are going to use the criteria that we highlighted, both qualitative criteria and quantitative criteria, to highlight if the segment is a reportable segment or not. a reportable segment. Therefore, when you come to qualitative criteria, we said we have three. Under qualitative, we said the segment must be engaging in business. When you check here, we have manufacturing, distribution, retailing, and hotel chain. Those are business we are doing. Therefore, it's engaging in business. Number two, we say the internal operating result must be reviewed by the chief internal decision maker. When you read in a statement here, examiner is saying he informs you that the operating result of each of the divisions presented below are internally reported separately to the chief internal decision maker. Therefore, it means it's reviewed by the chief internal decision maker. Then number three, we said that financial information must be available. When you check in each segment, there is financial information. We have sales, we have profits, we have assets. Those are financial information. Then we go to quantitative criteria. Under quantitative criteria, you test what we call 10% revenue rule, 10% asset rule, then 10% profit or loss rule. Therefore, quickly we go there and test and see which one of the segment is a reportable segment. Therefore, we start with 10% revenue rule. We start with 10% revenue rule, of which we have manufacturing. We have 460. We add both internal and external plus 250. Of course, we get 710. We have distribution. We have 5 plus 42. I'm adding the revenues, which of course is 47. Then we have retailing. Retailing is 750 plus 15. Of course, it's 765. Then we have hotel chain, which is 150 plus 3, of course, 153. Then you add and test the 10% revenue rule there. 10% revenue rule, quickly. You add and test, that is 710 plus 47 plus 765 plus 1675. Then we test 10% revenue rule, that is 710 over 1675 times 100. This one is 47 over 1675 times 100. This one is 765 over 1675 times 100. 153 over 1675 times 100. We are going to test 42%. That is above 10%. That one qualifies. Number 2 is 47. .8%. That one, according to the revenue rule, it will not qualify. .45%. Then lastly, 9.1%. Therefore, based on revenue rule, the distribution and hotel chain will not qualify. Based on this rule, it will not qualify. But I said one thing, listen very carefully. I said one thing, once you qualify all the qualitative criteria, in the quantitative criteria, you only need to qualify either 1 or 2. Once you qualify all the 3, therefore a must is the 3, the qualitative rule, qualitative criteria is a must. But when we come here, you only need to qualify either one or two. Like when we check here, under revenue rule, distribution is not qualifying, hotel chain is not qualifying. But maybe when we go to another rule like the asset rule, you will find that maybe it will qualify. Let's go to the asset rule and see if it will qualify. 10% asset rule. And here we have 14, that is manufacturing, distribution, retailing, and hotel chain. This one is 1450. This one is 250. This one is 375. This one is 100. We add all of them together. We add all of them. $21.75. The first one is 1450 divided by 21.75 is 67%. 11%. 17%. 4.5%. Therefore, when it comes to asset rule, you find that distribution is qualifying, but here distribution did not qualify. Therefore, it means that distribution is also a reportable segment based on this criteria. Now, what is remaining is hotel chain. Let's go to the profit and see if hotel chain will qualify or not. Profit rule. Profit rule, we have manufacturing and retailing. Now here, we are comparing the profit and the loss separately. You compare the profit and the loss separately. Now, the loss is 14 out of 14 times 100, which is 100%. Therefore, that is a hotel chain. Hotel chain in the profit rule, it is a loss. Hotel chain in the profit rule, it's a loss. Therefore, you test it separately. And when you test it separately, we are getting 100% because 14 over 14 times 100 is 100%. Therefore, which means based on profit and loss rule, hotel chain has qualified. Therefore, our deduction is based on the criteria, qualitative and quantitative criteria. All segments are reportable segments. All segments are reportable segments. Based on those criteria, all segments are a reportable segment. Therefore, in this question, examiner did not want a segment report, but examiner wanted I wanted you to show which one is a reportable segment, which one is not a reportable segment, using the criteria that we already highlighted there. Using the criteria we already highlighted, therefore we have identified that all the three segments all the 3 business segments, 4 business segments are reportable segment. That is how you test if a segment is a reportable segment or not. Now, having done this, now let's go to another question and see how you prepare a segment report. Let's go to the question of December 2017. December 2017, question 5, and see how you prepare a segment report. Given the information, how do you prepare a segment report? This one, your examiner wanted you to test which one is a reportable segment, which one is not a reportable segment. We have established that all segments are a reportable segment. Now, let's go to December 2017 quickly and do another question there. December 2017, Mwalimu is already there. December 2017, Mwalimu is already there. December 2017, and prepare a segment report there and see how you prepare a segment report. How you prepare a segment report. December 2017, question number 5. It has been a journey being with you guys. I believe we have done, and today we are completing everything on our syllabus. Therefore, it has been a very great pleasure to be with you guys. And I just wish you all the best, even as you prepare your exams. As you prepare your exams, at the end of at the end of our discussion, I will highlight the topics that you need to seriously revise as you prepare for your exams. Therefore, you stay with us, be tuned in as we prepare for the final lap of our discussion. It has been a great pleasure to be with you guys. Let's go to the question number 5. Question number 5. Question number 5 of December 2017. Number 5A. Highlight 6 examples of unethical behavior by the management of business entities which professional accountants should report about. Highlight 6 examples of unethical behavior by the management of the business entities which professional accountants should report about. Now, you as an accountant, which are some of the behaviors or the things in the company that you are required to report about? Like, for example, if there's money laundering, if there's corruption, misappropriation of assets, if there is a tax evasion, you need to report about those items, misappropriation of assets or funds. If there is money laundering, those are some unethical behavior, and ethical behavior you are required to report about. Therefore, there are many things that you are required to report about as a professional accountant. Let's go to number B. With reference to International Financial Reporting Standard IFRS 8 operating segment, outline for disclosure requirements for a reportable segment. Now, disclosure requirement in a reportable segment, we highlighted the other day, disclosure requirement. We said number 1 is the revenue or sales. And this one you highlight external sales and intersegment or internal sales, intersegment sales there you highlight. Then number 2, we have segment assets. You disclose segment assets. Number 3, segment liabilities. Number 4, operating profits. Then number 5, segment expenses. Then number 6, reconciliation statement between the segmental segment and the company itself, Those are the disclosure requirements in a segment. If you are in our previous class, you saw how we prepared the format of a segment report, of which we highlighted what should be reported in a segment report. Therefore, these are some of the items to be disclosed in a segment report. Let's go to part C or part B2. It says the following information was obtained from the financial records of Superfood Group for the year ended 31st October 2017. We have consolidated income statement, sale of goods, service revenue, rental income, revenue total. Then we have cost of sales, gross profit, other incomes, selling and distribution costs, administrative expense, other expenses, operating profit, finance revenue, finance cost, share of associates profit, and all that we have here, that is the income statement. Then we go to the balance sheet. Under the balance sheet, we have property, plant and equipment, investment in properties, intangible assets, all the way we have equity there. Then we have non-current liabilities and current liabilities in the balance sheet. Then we go to additional information. Additional information, note number 1. For the management purpose, the business is organized into 5 operating segments, that is rental, catering, manufacturing, publishing, and others. Number 2, details of the operating segment are provided below. We have revenues, total revenue in the segment revenue, where we have retail as a segment, catering as a segment, manufacturing as a segment, publishing, and others. Number B, operating profit, we have retail, catering, manufacturing, publishing, and others. Number C, segment assets and liabilities, of which we have all of them there. Then number 3, in the segment profit amounted to 42.23. Required segment report as far as the information provided above allows, according to IFRS 8 operating segment, 10 marks. Now, when you check in this question, examiner wants you to prepare a segment report. Unlike in the previous question we have seen in September 2021, examiner wanted you to highlight which one is a reportable segment, which one is not. But this one, examiner wants you to highlight, to prepare a segment report. Therefore, without wasting time, when you check in the income statement and the balance sheet, under segment information, that is irrelevant. The balance sheet is irrelevant. The income statement is irrelevant. Whatever information that will be relevant is number 2. Number 2 is the only, not number 2 is the only information that is very relevant. How is it relevant? Because it is going to show us how are we going to categorize our segment. Now let's see how we are going to prepare our segment there. Therefore, we say it is called Superfood Group. Superfood Group. Superfood Group. Segment report. Segment report for the year. For the year end 31st October 2017. 2017. As I already highlighted, this is our last class. Therefore, we need to be very keen. Our last class, I believe, God willing, we are going to discuss even the theories that are pertinent to our exams. Therefore, I pray that we shall finish everything, so that I also highlight which are the areas you need to be careful with when you are revising, because what is remaining is for you to revise. Therefore, we are going to say we have segment. Here we have retail as a segment. We have catering as a segment, manufacturing, publishing as a segment, others, and total. others, and total. This is our segment. This is our segment. This is our segment. Then out of the segment, you are going to report your revenue, total revenue, total revenue. Total revenue, you just pick them, 129,842, 66, 853. Then we have 39,495. We have 32,306. Then others is 37,447. Then you add all of them, you get total. Total, you add all of them, you get total here. You get total. You add all of them, you get total there. Then you come to less in the segment. You come to less in the segment revenue, of which examiner here, he gave us dash. After we less, we get what we call external revenue. External revenue, of which it's 129 here, 842. Then for the second is 7465. We less 7465. Of course, you get you are here. Then we have 36. That's 6791. Of course, you less in the segment. You get here. Then we less dash. Of course, I'm going to get 32,306. Then here we less 56, 63, 56, 63. Of course, we get here. Then also whatever we get total here, we less. Total, you add all this, then we get this one, our total external revenue. Total external 305, thank you very much. CPA, thank you very much, 305, 943. 305, 943. That is total when you add all that. When you add, I believe that is what you mean there. Then also you add in the segment you less to get external revenue. Now, in your books, this is the external revenue you are going to report in your income statement as your revenue, because you cannot report in the segment revenue. In the segment is where you sold to your brother, your sister in the company or to your division. That is not revenue. Therefore, when you are preparing the financial statement, in the segment you don't count. That is why we less in the segment. Therefore, we only recognize the external revenue there. We only recognize external revenue. Then we go to segment operating profit. Segment profit or the operating profit. Examiner was very gracious. He gave us 6887. That is for retail. 4716. 4919, thank you very much. 4919. You say 4919, 49,919, then 250, 265, 024, 49,919, 49,919, we less. Then you say we get 256, 024, 256,024. That is our external. Therefore, this external is what we report. This is what we report. That is what we report in our financial statement. Then we go to segment profits there. Segment profits, of which we have 4716, we have 1283, 1169, 3284. Then you give me also total. You give me total. Then we less intersegment. Intersegment. Others is 31,783, 31,784, 784. Thank you very much. 31,784. Thank you very much. You came with the new energy here. Thank you very much. You came with new energy. I believe you were not present in our previous classes because we struggled a lot to get the figures, but I can see your new energy. That is what we need in class, a new energy like this one. Thank you very much, CPA. Already you are CPA, Maria. Thank you very much. Thank you very much. For the new energy, we missed that new energy in our previous classes. Thank you very much. Thank you very much. Okay, we less in the segment here as our good friend Maria is giving us figures there. That is good. That is good. That is very motivating. That is very good. Now, when you check on in the segment profit, in note number 3, examiner gave us the inter-segment profit amounted to 42.23. Therefore, it means that it is not here. It is not here. It is not here because it's only total. It is not here. It is not here. Only total, which is 42.23. We less 42.23, then we get our in external profit. External, we call it external profit. Therefore, you add all of them. Then in note number 3, examiner gave us the intersegment profit, of which it is 42.23 in note number 3. Note number 3 there. Then we just less from the total. Then we get the external profit. External profit there. You go to external profit there. Then we go to segment assets. Segments. In this question, we are not given the expenses. We were not given the expenses, but if you are given the expenses, also you highlight the expenses. You highlight the same way we are highlighting the profits, you highlight the expenses. In this one, we are not given. That is why I'm just seeing the assets, of which it is 50, 150, 2, 45, 145, 24,620, 14,165, 23,829, 23,829. Then you give me total assets there. You give me total assets. You give me total assets. You give me total assets there. After you give me total asset, then we come to unallocated. Unallocated, I'm seeing investment in associate. Investment in associate, that is our unallocated. You just take it to the total, 764. Then you add total assets there. That is unallocated, or you can just call it investment in associate. But remember, in our format, we said unallocated or common. Unallocated or common. Unallocated or common, of which we have it there. Of which we have it there. Then we go to segment liabilities. Segment liabilities, of which we have 14,839, 14,839, 97,83, 97,83, 36,09, 47,04, 47,04, then 34,175, 34,175. Then you give me total. You give me total there. You give me total. You give me total. You give me total there. You give me total there. You give me total. If there is unallocated, you also include unallocated. But in this question, we don't have the unallocated. If there were unallocated, you come and include here a common or unallocated. Unallocated is what is not on this one, 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 but it's just only on total. That is common or unallocated. Like when you take the assets, we have investment in associate. Investment in associate is not in investment in associate is not in retail, catering, manufacturing, but it's only separate. Therefore, we put it separate. Therefore, you can see Mary saying 67,110. 67,110, is it assets or liabilities? Is it assets or liabilities? You come clear there so that we write a good. Is it assets or liabilities? 67,110. Liabilities, total liabilities here. Total liabilities is 67,110. Then, because we don't have an allocated or a common, that is how you present it. That is how you just present it. Our segment report. That's our segment report. That is how you present your segment report there. That is how you present your segment report. Your segment report there. That's how you present it. That is how you present the segment information. Now, all this total, all what is in the total is what will make up the organization, assets of the organization. That is what will make up revenue of the organization, profit of the organization, liabilities of the organization. That is what will make up all those items that we need to make up the organization. That will be required to make up the organization there. Any question as we move on? Any question as we move on? Any question as we move on? Now, sometimes apart from presenting the segment report, examiner may want a reconciliation statement. Examiner may want a reconciliation statement. A reconciliation statement, it means I'm going to reconcile what is on the segment and what is in the my financial statement. What is in the financial statement and what is in the segment. Therefore, sometimes examiner will want a segment report like this, then a reconciliation statement. A reconciliation statement. Therefore, let me show you how you prepare a reconciliation. I believe we are done with this. Let me show you how you prepare a reconciliation statement. Sometimes examiner will want you to prepare what we call a reconciliation statement. How do you prepare a reconciliation statement? Reconciliation statement. Now here, I'm going to reconcile my revenues, revenue. I will reconcile assets. I will reconcile profit. I will reconcile liabilities. This is what I'm going to reconcile. This is what I'm going to reconcile. Now, how do I reconcile? I'm preparing a reconciliation statement. We reconcile the revenue, we reconcile the assets, we reconcile the profit and liabilities. Now, I will say here, I have several, which I have catering, which are my manufacturing. Sorry, we start with retail. Sorry. Retail, catering, manufacturing, publishing, others. Then out of that, I come to include here, their in the segment, then unallocated or common, then whatever I get here, as total, I compare with as per financial statement. What does the financial statement say? Then I am going to compare what I have in the segment and what I have in the financial statement. That is how you reconcile. Now, I'm just going to put here 129,842, the revenue from retail, 66,853. Manufacturing is 39,495. Publishing is 32,306. Others is 37,447. Then in the segment, you just take total of the intersegment there. We already have total in the intersegment, which was 49,919. Then there was no unallocated. This one we less, intersegment we less, but you less total. You less that total in the segment. Then I believe you are going to get 256,024. 256,024, as we already have it. 256,024. Then out of this, you compare with what is in the financial statement. Then we go to our income statement. Let's go to our income statement and see how much of the revenue do we have. Under income statement, we have sale of goods, service revenue, rental income, then revenue is 256,024. 256,024. Therefore, we have reconciled, as you can see, what is from segment is the same as what is in the income statement. Therefore, we have reconciled that. One. Then we go to the assets. Assets, you do the same. You just do the same. Assets, you do the same. We are going to take 5152, 5145, 145. 39,495, sorry. 24,620. 14,165, sorry. 14,165. Then 37,447. Then we don't have intersegment. But we have unallocated of 764. Unallocated of 764 we add. Unallocated of 764. Unallocated of 764. Then we compare as our balance sheet. From the balance sheet, as you can see, total assets is 158,675. 158,675. 158,675. Therefore, when you add all this, you are required to get 158,675 as per the financial statement, as per the balance sheet. As per the balance sheet. If you get that, then you are okay. If you get that, then you are okay. That is how you reconcile. After that, you do the same with profit and liabilities. If examiner wants you to reconcile, that is what you do. I believe at your own free time, you will have to reconcile profit and liabilities at your own free time using the format we have just used, because we were just doing it in a way.
Mwalimu.
Yes.
Good evening.
Good evening.
We do not, we are not going to subtract unallocated assets. We add it back.
Unallocated, you add.
Okay.
Remember, it's just an asset of the organization, but it is mostly, it is based at the headquarters. Remember, unallocated, it means it's not in the segment A, B, or C, it's just at the headquarters. Therefore, that one you add. Therefore, that is how you prepare a segment report. That is how you prepare a segment report, and that marks the end of our segmental reporting topic on the segmental reporting. You just require to know how to present a segment information there. That marks the end of our topic, segmental reporting. Any question before we move to something else different? Any question before we move to something different?
Mr. Wabomba, if you are given external revenues, how do you start? There's a question that I saw. They started with external revenue, then internal revenue. So now, I don't know which one.
External revenue, it means you are going to work backwards. It means you are going to work backwards. You have, as you saw, we have total revenue. Total revenue, for example, XX. We come to less in the segment. In the segment revenue, we less. Then we get external revenue. That's a very good question, Florence. It's good of you. Now, in this one, what Florence is saying, you are given external and in the segment, but you are not given the total revenue. Therefore, it means you are going to work backward. You work backward, where you take your external revenue plus internal intersegment, then you get total. You get total revenue. You get total revenue there. Then when you are presenting a segment report, you are going to work backward, you add as you move on. You add because you are required to disclose what was total revenue, what was in the segment and external. Now examiner has only given you external and in the segment, therefore you add back, you take this plus this, you get the external for each. For each you do that. Okay, if there's no any other question.
No, there is.
Any question?
Yes, there is. So another question again I saw.
Yes.
Like, for example, the one that we've done, note 2, it has given us all those disclosure requirements for segments. Then in between, there was an investment income, and there's also finance costs, and there's also finance income. You get it? And then you are told to calculate the expense. I can't just remember which question it was. Then you are told the expenses amounted to this. Calculate total expenses, and remember, total expenses, it has finance income, investment income, finance cost, and finance income. So how was I supposed to be tackling this question, Mwalimu?
Now, when you are presenting a segment report, if examiner gave you the income, it means he will not sometimes give you the profit. There you are just going to present, for example, after you present the revenue here, after you present the revenue, then you are coming to your finance income. You present the finance income, you just present it, segment A, segment B, segment C. After that, you are given expenses of the company. Expenses, if you are given expenses, you also just highlight segment A, segment B like that. You just highlight them. Sometimes the examiner will give you cash expenses and non-cash expenses. If examiner has given you two expenses, cash expenses and non-cash expenses, then you are going to separate them. You say expenses, then you say cash expenses, you put segment A, segment B. Non-cash expenses, segment A, segment B like that. Then at the end of it all, you add total expenses. You just add like that, then you give us total. Therefore, if examiner in a segment report, you are just going to disclose the information. You are not going to calculate anything. If it is income, you just disclose segment A, what was the income, segment B, what was the income, segment C, what was this, blah, blah. When you come to expenses, that the same way, you do it the same way like that. That is June 2011 question number 3. Unfortunately, I don't have it right away here. But if there is those items, you just allocate it, that way. If there is cash expenses, non-cash expenses, you just highlight what were the cash expenses, what were the non-cash expenses, you just add total expenses there. You are not doing nothing else there. Are you okay, Florence? I can see you highlight the question of June 2011. Unfortunately, I don't have it right away here. Okay, thank you very much. Okay, we go to another topic of which we are going to discuss the theories. Financial statement in hyperinflationary economy. Financial statement in a hyperinflationary economy, that is IAS 29. Financial statement in a hyperinflationary economy. Very important topic here at this point in time, hyperinflation. Now, when we talk of hyperinflation, what do we mean? Hyperinflation, what do we mean? Hyperinflation. When we talk of hyperinflation, this is too much inflation in the market. Like if I may ask, what is the inflation rate in Kenya today? Inflation rate in Kenya. Mwalimu is writing the word Kenya. Inflation rate in Kenya today is around 5 point something. Inflation in Kenya is 5 point something. In Feb, averagely it was 6.3 in Feb. But in March, it dropped to 5.8, 5.9 there. We are around there. I'm not so sure today what is the inflation rate, but it's around 5 point something. Therefore, When we go to other countries, you will find that the inflation rate in other countries is like 100%, like 200%, like 300% inflation rate. Then when you compare Kenya and these other countries, Kenya, we are far much ahead in the economy because the inflation is around 5 point. But in other countries, the inflation is 100%. Like when we go to our good friends from Ghana, Ghana inflation rate is 87% today. Inflation rate is 87%. When you go to Venezuela, I think the inflation rate is around 256%. Venezuela inflation is around 256%. When you go to Argentina, our good friends Argentina, the inflation rate, I think it is over 200% in Argentina. In Brazil, inflation rate is over 200. When you go to South Sudan, inflation rate is around 45%, around 45% there. In South Sudan, is around there. In Egypt, I'm mentioning countries that have high inflation. Therefore, if inflation is too high, like it's 100 or more than 100, we call it hyperinflationary economies. If it is 100% or more, we call it hyperinflationary economies. I have given you the examples of those countries which have hyperinflationary economies. Now, what causes inflation, hyperinflation? What causes hyperinflation? The thing that causes hyperinflation is the oversupply of money in the economy. Oversupply of money without corresponding production. If there is too much supply of money, paper currency, but there is no production of goods and services, then of course it brings to what? To inflation. Like if you remember in Kenya, during the election in 2022, our inflation rate went up to around 8%, around 9.8. Why? Because there was too much supply of money in the economy. There were too much supply of money in the economy. Therefore, our inflation rose from 6% to 9.8%. Therefore, that is what causes hyperinflation. When you supply too much money in the economy without corresponding production of goods and services, then you cause inflation. Therefore, what examiner will want to know from you, what are the features or the characteristics of a hyperinflationary economy? What are the features of a hyperinflationary economy? What are the features? Number one, characteristics number one is that the general population prefers to keep their wealth in non-monetary assets. The general population prefers to keep their wealth in non-monetary assets or relatively in a stable currency. Like when you go to South Sudan, most people keep their money in dollars. They don't keep in South Sudanese currency. They keep it in dollars. Or if you want to affect this inflation, you keep your money in non-monetary assets. We are going to highlight what are the non-monetary assets, but just know that one feature of hyperinflationary economy is that the general population prefers to keep their money or their wealth in non-monetary assets. Number two is that the general population regards monetary amounts not in terms of their local currency, The general population regards their currency not in terms of their local currency, but in terms of foreign stable currency. In terms of foreign stable currency. Therefore, people doesn't regard their currency. They only recognize foreign currency. They recognize foreign currency. Therefore, that is number 2 characteristic of a hyperinflationary economy. Number 3 is that sales and purchases on credit take place at prices. We are saying sales and purchases on credit takes place at prices that compensate for the expected loss of purchasing power during the credit period, even if the period is short. But purchases, sales on credit will take place at prices that compensate for the loss of the purchasing power. Therefore, for example, you want to sell goods on credit. You don't say the cost of goods is 200. You don't just go sell them at 200. You factor in the inflation index so that you also cap the loss that you may incur when you sell goods on credit. Because remember, if you are selling goods on credit for 200, the one who is buying the goods will only pay 200. He will not pay more. He will pay 200. Therefore, when you are selling goods on credit, you are going to factor in the inflation index so that you don't get any loss on that sale. Characteristics number 4 is that interest rate, wages and prices, wages and prices are linked to a price index. We are saying that interest rate, wages and prices are linked to a price index. Now, what is a price index? Price index is the relative changes in prices in the market or in the economy. Relative change in the prices of goods and services, we call them the price index. The relative change of prices in the market. Therefore, for example, when the inflation rate is 20, for example, you are earning 50,000. When the inflation rate is 20, this inflation rate is going to 100. If you earn same 20, it means that there will be no purchasing power there. There will be no purchasing power because the inflation will have eaten all your money. If, for example, the inflation rate was at 20, maybe the price of bread was 60, like in Kenya, the price of bread is 60, around 60. Therefore, if it goes to 100, then it means the price of bread is going to around 500. Around 500, one bread is going at 500. Therefore, if you are still earning 50,000, then there will be no purchasing power. The money will have been eaten by the inflation there. Therefore, that's why we are saying those wages are linked to a price index, so that when the inflation rate goes up, also the wages or salaries are increased based on the change in prices. Those are the 4 features of a hyperinflationary economy. 4 features of a hyperinflationary economy. 4 features of a hyperinflationary economy. Then we look at how current purchasing power financial statements are prepared. Under hyperinflation, we say how current CPP, how current purchasing power financial statements are prepared. How current purchasing power, CPP, is the current purchasing power financial statements are prepared. CPP means current purchasing power. Financial statements are prepared. Now, how do we prepare financial statement under hyperinflationary economy? How do you prepare financial statement? This is the most important of all things we are discussing. This one is the most important. What we are saying here is the most important. How current purchasing power financial statements are prepared. That is the most important, my good friend Florence. That is the most important thing. Here we are going to say all financial statement items. Financial statement items except monetary assets and liabilities, except monetary assets and liabilities are restated to the CPP, to the current purchasing power. All financial statement items except monetary assets and liabilities are restated to the current purchasing power using a suitable price index, Remember that I said this is the most important under hyperinflationary. How do you prepare financial statement? We are saying that all financial statement items except monetary assets and liabilities are restated to the CPP using a suitable price index, there. Using a suitable price index. Now, here we need to know what are the monetary assets, monetary items, and non-monetary items, non-monetary items. Because we are saying, what does the CPP mean? CPP is the current purchasing power. How do this item cost today? For example, if I want to purchase this pen of mine, what is the price today? If I'm purchasing it at 100 shillings, that is the current purchasing power. I'm purchasing it at 100. But for example, I purchased this pen in January. I purchased in January for 50 shillings. For 50 shillings, for example, for 50 shillings. Then come in April, because of the inflation rate, this pen has come to 200. This is what we call the historical rate. This one we call it the historical rate. This one is the current purchasing power. If you want to purchase it today, it goes at 200 based on inflation in the market. Therefore, 200 is what we are saying the current purchasing power, CPP, current purchasing power. Financial statement. Therefore, what we are saying here is that all financial statement items except monetary assets and liabilities are restated to the current purchasing power using a suitable price index. Then I wanted to highlight what are the monetary assets? What are the monetary items? Monetary items here include receivable. Receivable is a monetary item. Receivable as a monetary item. Bank balance. Cash balance. Prepayments. Accruals, What else? Accruals. What else that we can say is a monetary asset? We have bank overdraft, bank OD, loans or debentures, dividends. Those items I'm mentioning are what we call monetary assets, monetary items. Payables. These are monetary items. Now we are saying that all financial statement items except monetary assets and liabilities are restated, except all financial statement items except monetary assets and liabilities, except. When I say except, which means these items that I'm mentioning monetary will not, let me write the word will not be restated, will not be restated to the current purchasing power, will not be restated to the current purchasing power. Therefore, if you are given that your receivable is 200, it will remain 200 in the balance sheet when you are preparing 200, when you are preparing the balance sheet. It will remain 200. You don't restate it to the current purchasing power. Why? Because let me tell you something. For example, you deposited 200 shillings in the bank. Even if the inflation rate rises up, will the bank give you more money? The bank will not give you more money. The bank will give you only what you deposited. For example, Mwalimu gave you 1,000 shillings when the inflation rate was 5. Even if it goes up to 100, will you pay Mwalimu more money? No, you will just refund 1,000. Therefore, we are saying that monetary assets and liabilities will not be restated. And Mwalimu has just mentioned what are these items that are monetary. Then we go to non-monetary items. Non-monetary items of which we are going to restate them. Non-monetary items. Non-monetary items here include number 1, land, buildings, motor vehicle, machinery, ordinary share capital, share premium, revenue reserve, etc. These items will be restated when you are preparing the balance sheet. You restate them to the current purchasing power. I'm hearing underground noise. Let me mute you all. What we are saying that these items, you are going to restate them to the current purchasing power. Now, how do you restate them? How do you restate these items? We say the conversion factor equals to, how do I restate these items? I need the conversion factor. How do I get the conversion factor? Conversion factor equals to price index at reporting date, price index at reporting date, you divide by price index at transaction date. Price index at the reporting date You divide by price index and the transaction debt. Now, let me assume price index at the end, price index at reporting equals to 50. Price index at the reporting is 50. I'm going to explain what is the statement means. What the statement, follow this, what I'm doing, then I'm showing you to restate. I'm just showing you to restate right away. I have your question here. I have your question already answered here. Just stay with us. I'm saying, when I want to get the conversion factor for me to restate this conversion factor, I'm going to take price index at the reporting date divided by the price index at the transaction date. Now, I'm assuming price index at the reporting date is 50. Then price index at the transaction date, transaction date is 20. Let me say 20. At transaction date, it is 20. Therefore, my conversion factor equals to 50 over 20. 50 over 20. 50 over 20, of which it is 2.5. 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 Now, let me assume my land and building equals to land and building equals to 2,000. Historical. My historical value for land and building is 2,000. When I started the year, my historical value is 2,000. My historical value is 2,000. My historical value is 2,000. Therefore, if I want to restate it, I'm going to multiply by the conversion factor, which is 2.5. Of course, it gives me, is it 5,000? Is it 5,000 there? Therefore, my CPP, my restated factor or value is 5,000. Therefore, in the balance sheet, I'm going to report 5,000 as the CPP. I'm going to report 5,000. I use the conversion factor. To restate, Florence means, you are going to put them to the current purchasing power, to the current prices, because of course examiner will give you the historical figures. Then also the conversion factor, then also the price index. Of course, the conversion factor and the price index, The conversion factor and the price index there, and the price index. The conversion factor and the price index. Therefore, to restate means I'm going to change this historical figures. This is my historical figures. I put them to the new prices using the conversion factor. I restate them to the current purchasing power. I put them to the current purchasing power. We call them restate, to restate them to the new prices, That is what we call restatement. Therefore, we are saying that all monetary assets and liabilities, you don't restate. When you are preparing the balance sheet, you don't restate. But other assets, you restate them. 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 Other assets, you are going to do what? To restate them. That is what we mean by restatement. That is what we mean by restatement. That is what we mean by restatement. Any questions so far? Any questions so far? Any question? Therefore, when you are going to restate, we use what we call the conversion factor. How do you get the conversion factor under CPP? You take the price index at the reporting date divided by the price index at the transaction date. Price index at the transaction date there. Price index at the transaction date. Any questions so far under hyperinflationary economies? Hyperinflationary economies. Now, like was it in December or April 2023? I think in December 2022 or April 2023. I think one of them, either December 2022 or April 2023, examiner asks a question. If you use, for example, the historical cost figures to prepare your financial statement under CP, under hyperinflation, what will be the problem? What will be the problem? What is the limitation of using the historical cost figures? For example, the historical cost figures is 200. Then you are not restating them to the current purchasing power. What is the problem? The problem is if you don't restate, then you are understating the assets and also you are understating the liabilities. You are understating the liabilities. You are also doing what? You are also doing understating of the assets. You are understating the assets if you are not restating them to the current purchasing power. If you are not, then you are understating. Examiner asks that question. I don't know if it is December 2022 or April 2023. You will check on your past papers, then you can answer that question. And if, for example, I have an income statement, if I have the income statement or the profit or loss, income statement or the profit or loss, income statement or the profit or loss, how do I restate? Conversion factor. How do I restate or get the conversion factor? Conversion factor equals to price index at reporting date, divided by price index at average price index, average price index. You divide by average price index. To get the conversion factor in the income statement, if I'm restating the income statement items, that is the sales, cost of sales, blah, 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 blah. You are going to use the average expenses in the profit or loss. We are going to use what? The average price index. We are going to use the average price index, there. You are going to use the average price index. But if it is the balance sheet, you are going to use price index at the reporting date over price index at the transaction date. Now, when we say transaction date, what do we mean? What do we mean? It can be one. Listen to this, is very important. This transaction date. It can be one, the date when you purchased an asset. the date when you purchased an asset. Number two, it can be the start of the year. For example, examiner takupatia the price index or indices. Price indices here, we have price indices. He has given you January, it is 20, for example. June, it is 30, for example. December, that first December, it is 50, for example. Then average during the year is 40, for example. Average during the year, it is 40. Now, I want to restate my balance sheet items. Examiner has not given me the date when I purchased the asset. Examiner has not given me. But examiner has given me the date when I started the year. The indices when I started the year. That becomes the transaction date. And the reporting date is, of course, when we are closing the books, that is in December. Therefore, it will be 50 over 20. That is, we get 2.5 as our conversion factor. If it is income statement items, that is the revenues, expenses, blah, 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 I'm going to take 50 over 40, average price index, 50 over 40, average price index. If it is income statement, but if it is balance sheet, if examiner has not exactly given you the date when you purchased an asset, then you use the start of the year. On 1st January, when you started the year, what was your price index? That is what you use as your transaction date, Any question up to that point? 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 I'm waiting. Any question? Any question? Okay, if there is no question, there is a handout I posted on our WhatsApp. It has what we call IFRS for SME. That handout has what we call IFRS for SME. It has what we call related party transactions. You are also required to read on this. It's just one page. You read on IFRS for SME from our handout. To know what is IFRS for SME, these are, when we talk of IFRS for SME, this is a special standard that is used for small and medium enterprise. SME means small and medium enterprise. Remember, small and medium enterprise will not apply full IFRS. When we say full IFRS, it is like when we are talking of IFRS 8. That is the operating segment. IFRS 8, that is the operating segment. That one, we mean that. Then SME standard. SME is a special standard used by IFRS for SME is a special standard used by small businesses. Then what are the features of SME? Number one is that they don't have any public accountability. And SME is a small business. Like we NTC here, we are a small business. Nobody will ask us what was your revenue, what was your expenses, did you make profit or loss? Nobody will ask us because we don't have any public accountability. Then we are just a small business. Then number two features, number two is that they prepare financial statement for their own use. SME prepare their financial statement for their own personal use, not for publication, not for publication. Therefore, an SME is a small business, a small business. Therefore, examiner will want you to say some things there. When you go to our notes, there are the differences between SME standard and full IFRS. The differences between SME standard and full IFRS. There you are required to tell me that some treatments that are excluded from SME standard. Treatments that are excluded from SME standard. Then another thing is that you are going to read on simplifications in SME standard, simplifications in SME standard. When you go in our notes, all these things are there. The differences between IFRS for SME and full IFRS, differences are there. Then treatments that are excluded from SME, they are there. Then simplifications in IFRS for SME, simplifications in IFRS for SME, it is also there. Simplifications in IFRS for SME, it is also there. Then you just go and read them, then you get the concept there. It has nothing much. It has nothing much there. The simplifications in IFRS for SME, IFRS for SME. Then you also go and read something on related party. What is a related party? What is a related party? When you talk of a related party, this is somebody or any company that you are related to. For example, if, for example, your brother or sister is a CEO of a company, If your brother is a CEO of a company, then you do business with that company. Then you as an individual, you do business with this company. Then it means that this company is doing business with a related party. Because if you are a brother to the CEO, then you are also related to that company. You are also related to that company. Therefore, you are required to know who is a related party. When you go to our notes, is there who is a related party. Then number two, how is an individual related, a related party to an entity? How is an individual like Mwalimu here a related party to an entity? Then how is an entity a related party to another entity? When you go to our notes, it is highlighted there. You need to understand them. How do the entity and another entity relate? Then you are also required to understand the disclosure requirement in a related party relationship. Disclosure requirement in a related party relationship. Then what are the items that you are required to disclose whenever it is between the related parties? What are the items? Like, for example, sale of goods, purchase of assets, or lending of money, provision of services, and other obligations. Therefore, those are some of the items that you are required to disclose whenever it is with a related party. When you go to our notes, it's highlighted there. Therefore, you just need to know who is a related party. Like, for example, now Mwalimu, with this company called NTC, we are related. How are we related? Because I'm a teacher there. I'm a teacher in NTC. Therefore, I'm also now today a related party. If I do any business with NTC, then there will be some influence because sometimes we can negotiate on terms that is not the market terms. We can negotiate on terms that is not market terms because I'm related to this entity. Because by virtue of being a teacher here, then I'm related to this good college. Therefore, you need to understand what is a related party relationship. Once you understand that, then everything else will flow. Everything else will flow. Everything else will flow. Already you have the notes. Yours is just to understand there. Then let me also highlight some of the important items. I said that at the end of this lesson, I will be highlighting which are the topics that we highly expect in an exam. I'm not ruling out anything, but I'm saying from my own opinion as your teacher here, what do I expect? Number one, of course, group accounts will be there, group accounts. Group accounts, that one will be in an exam, group accounts. And in the group accounts, mostly you need to understand disposal. Disposal of shares, disposal of shares, disposal of shares in group, disposal of shares. You are required to understand much more on disposal of shares. Number two, I'm not saying other sectors that we did, like foreign subsidiary, like piecemeal acquisition is irrelevant. I'm just saying, my spirit is saying we look at more of disposal of shares in a subsidiary. Number two is the group cash flow. Group cash flow. Group cash flow, you need to understand group cash flow. Number three, you need to understand earnings per share, EPS. When you go to an exam, you need to understand the EPS. Number four, we need to understand reconstruction very much. Reconstruction. Under reconstruction, we already know we have internal and external. Internal and external. I will not highlight which one, but because of course we did all of them, you need to understand reconstruction. Then number five, you need to understand leases. Leases, we did leases, therefore you need to understand much on leases, much on leases. We need to understand much on leases. Then number six, you need to understand financial instruments, financial instruments there. Financial instruments, you need to understand financial instruments. Then number seven, of course, you need to understand segmental reporting. Segmental reporting. I'm not ruling out the other things that we did, but remember, Mwalimu is just saying when you go to an exam, these items needs to be at your fingertips. All these items. The rest, you need to know them, yes, I'm not disputing. But this one needs to be at your fingertips. Something like group accounts, disposal of shares needs to be at your fingertips. Cash flow, of course, it needs to be at your fingertips. EPS, that is the earnings per share, reconstruction, leases, financial instrument, of course we did, then segmental reporting. Then without forgetting number 8, conceptual framework. Conceptual framework, of which after this class, I will post some book on our WhatsApp. And in this book, you are only going to read from page 1 to page 19. From page 1 to page 19, which is the conceptual framework. Conceptual framework is just the process of coming up with the standards, the accounting standards. That is the conceptual framework, just the process of coming up with the standards like the IFRS, the IAS. What are the advantages of these standards? Why should we have this conceptual framework? What is the purpose of conceptual framework? What is the scope of the conceptual framework? You need to understand all this so that when you go to an exam, this is a perennial thing. Examiner will always ask something on conceptual framework. But if you read what I will post from page 1 to page 19, it is just a book, but you only read page 1 to 19, which is the conceptual framework. Once you master this one, then I don't think if anything will go wrong in an exam, I don't think if anything will go wrong in an exam. Anything else, maybe you want me to address, kindly, you can just chat it. Anything else you want me to address, kindly, you can just chat it. Anything else you want me to address? Anything else you want me to address? Florence, you are saying share-based, share-based. Now, share-based, I have not ruled it out, but you just, because we discussed it, just know it as a topic in FR. This is how we do about share-based, then that is okay. It's not bad. How to do share-based? Don't, of course, you have been in class, you have the videos, you know how to do share-based. Therefore, nothing much. Nothing much. And you are saying I unmute you. Therefore, kindly be quick.
Mr. Wabomba, thanks again. Sasa, I have a question. They're telling me in expected employees turnover for year 1 is 5%. Expected turnover for year 2 employees, it's 8%. For year 3, 6%. How do I compute this one?
If the expected number of employees year 1 is 5%, year 2 is 8%, then year 3 is 6%, then let's assume our employees are 1,000. Therefore, you take 1,000 in year 1 times 95% times the options times the options. I believe you know it. Year 2, you take still 1,000 times 92%. Times the options times the fair value there. Year 3, you take 1,000 times 94% times the options times the fair value times blah blah. That's how you go about it. Are you okay, Florence? Florence, are you okay? Okay, that is how you go about it. Thank you very much. Thank you very much. Therefore, I just want to say thank you for your cooperation this semester. And we have been together. Thank you very much. I wish you all the best. In an exam, we have done 95% of our syllabus. We have done 95%. And if you just revise what we have done, and if you have all the information, then I have no doubt that you are going to make it. You are going to do very well, not just to pass, but to do very well in your exams. Thank you very much, and I wish you all the best. If there is anything else, we shall communicate. We shall communicate. If there will be anything else that I may want us to discuss, we shall communicate. But for now, that is the end of our syllabus, and I wish you all the best. I wish you all the best. And also, I wish you all the best in your revisions. Thank you very much. Bye-bye.